Folks, we try and do a lot of preparation for this show. We have Claude, who's always working. We have Fee, who's working overnight. We have Dennis, who comes up with a great title like Cinco de Mayo. But sometimes I just feel like hijacking the show and going off the rails. Well, today's going to be one of those days. We're going to talk some earnings, not much on ratings, hardware, software. We'll cover it all. Al Kluis joining us at 8:35 to talk about the commodities markets. Folks, fasten your seatbelt on this Tuesday. Pre-market prep starts right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, folks. These charts are brought to you by TradeStation Securities, born to trade. Chart, analyze, customize, all in one platform. Trade smart and move faster and stay in control with the platform built for serious traders. Trading in the green today, folks, for Cinco de Mayo. Up 26 handles, 72.56.50. Moving in on that old-time closing high, folks. Write that number down, 72.58. The buck quiet up 8 cents here, hanging out at yesterday's high, 98.34. TLT under $85, flat 84.96. USO, tensions or no tensions, we're down $1.73 at 145.88. GLD up 369, that's 418.40. Silver joining in about the same percentage, that's up 0.7, it's 66.64. And Bitcoin working its way higher, we're up $920 in the futures at 81,310. All right, let's bring on Triple D. He's shaking in his boots. He doesn't know what I'm going to say next.
Never.
But Brent, hit the breaking news. We got some breaking news.
That's our breaking news, bud.
We got to work on it. Hey, Brian, if you're listening, we got to work on
breaking news. What's the breaking news?
So
What's
you know, the Stock Trader Network is making an acquisition. We are buying Bloomberg for an undisclosed price. It's not going to be dilutive to earnings. We're not sure where we're going to get the cash, but we're going to put it up on our website why we're doing it. Okay,
it's going to be made up of 50% stock, 50% cash.
Yes. Okay. So that Brad's looking at his crystal ball. Okay. Right?
This is I think you're going into GameStop, aren't you?
Yeah.
Ryan Cohen, eBay.
A little tiny company buying the biggest company in the world.
We can do it. If Ryan Cohen can buy eBay, we can buy Bloomberg. Let's go. Let's do it. That interview yesterday. So I'm sorry, GameStop lovers out there. I have been saying I like GameStop in the low 20s because it's $12 in cash and you never know what Ryan Cohen is cooking up. I am now of the opinion that I don't know what Ryan Cohen is cooking up anymore. I don't know. I still don't know. I mean, the interview on CNBC was nothing short of a disaster. They asked him, I don't know who watched yesterday morning, but they asked him, they were adding it all up. Andrew Ross Sorkin, fantastic job adding it all up and saying, look, you're short $16 billion, even if you get this $20 billion from TD, which is just a letter. And he said, where's the rest of the money coming from? And Ryan Cohen's response, I don't understand the question. And then Becky Quick comes on, same thing. Like, well, it's not that hard, like you've got this, like the money isn't there. He's like, I don't understand your question. It's coming half stock, half cash. So, we do a Bloomberg acquisition. It was like, where is the I don't know what Bloomberg would even be worth because it's a private company. $1 trillion coming from. I don't understand the question. Crazy, awful interview. After that, I've been buying GameStop every night and doing it for trades because I'm like, Ryan Cohen's cooking something up. Eventually, we're going to get a pop. Obviously, we did get a pop, but now I'm like, I don't even know if I can do that trade anymore. And Michael Burry says he's out too. Michael Burry sold his entire position, was disclosed last night. He disclosed it on his Substack. He is gone as well. The interview was just not good, unfortunately, for Ryan Cohen. I think there's zero chance. I've called a fantasy world for Ryan Cohen that he can buy eBay. I think if I'm eBay management, you're just basically laughing this off. There's just, there could have been so many different ways he could have went about it. It's just, you can't, I can't see how. Maybe some people are saying he's going to find a way. Maybe he's going to work really hard to find a way here now, but Michael Burry says he's out. And you know what? I've been like playing GameStop here too, and I'm out too.
I mean, you're just not going to trade it at all?
I don't know. It's going to take me a while. I trade everything, but I've been like doing it nightly because I've been expecting something cool. Like, what is he working on? It's getting exciting. And you do have the $11 or $12 in cash. So you got a cash floor down there. So you get the brand, you get Ryan Cohen. I just all of a sudden feel like Ryan Cohen lost a lot of value yesterday. Like the value of Ryan Cohen himself being the management lost value yesterday with that interview. It was not as bad as the Roaring Kitty GameStop debacle on YouTube, like from like 3 or 4 years ago when he was all injured and he had the thing, and that was just the weirdest, YouTube video ever with the return of Roaring Kitty. But it was not good, man. It was like he did not know, like he did not look like he knew what he was even talking about. It was a bad interview, man.
What I noticed too, and it's just for years and years and years of doing this show and, evolving through, I don't know how many different platforms, but you could tell like they were like Andrew Ross Sorkin, Melissa Lee, they were like they could have, and you could tell the people were like talking in their ears and like, you could tell and the wheels were turning. That's just like Brentster, like when he's trying to get his back on stuff. And they're like, okay, we got to regroup here. And you can tell the production. I mean, I thought CNBC, I think they did an excellent job with it. I was just astonished.
Well, Andrew Ross Sorkin started laughing out loud when he said, I don't understand the question. Then he stops.
He probably thought he was joking
because of the response. And then he laughs a bit. And then he's like, just slowly trying to explain the math. I mean, I don't know. The math just doesn't add up. So, like, you'd think if you're doing a proposal to acquire a company, you would have like concrete ways to raise the cash before doing the proposal. They didn't have enough money, like even spoken for. Now, obviously they got, like the 10 or $11 billion in GameStop itself. Thank you to all the, the memesters and everyone who gave them that, during the COVID crisis. But I mean, and you're adding it up. He's got some letter or something from TD that they're willing to lend. I don't know if 16 billion or 20 billion. I can't remember the numbers now. So, I mean, but he just didn't have all the math added up. You're doing an acquisition proposal, a formal one. You've got to have the financing, like how you're doing it. It doesn't make any sense that he didn't have all the financing lined up before giving the proposal. Like that's what I don't get.
And that point in mind, just to say it, I'm just saying this because I think somebody should ask it. Is there a chance this is all just one finely articulated troll job? I've never really listened to Ryan Cohen speak for any long amount of time before. Is this all just a setup?
I don't know.
Somehow?
I don't know. He sounded pretty serious about it. Like he was like, he's like, we'll wait and see. He sounded like he's got other things cooking. So we'll see. We'll see what else he's got cooking there. But so far, not so good. I agree. We're wasting our time here on GameStop.
Okay.
So
I agree with Coach for once. He hates this show. I mean, he just does not like our show. But that's okay.
I want to skip down to
wait, Brentster had one more thing on this.
Yeah.
Or we done,
Dennis, I just wanted to give you a compliment. Dennis in the SCN room, think tank, basically putting a moratorium on him trading GameStop. Like he said, he's been trading it like every night for quite some time. And he sees this Ryan Cohen interview. He says, well, I don't think I can really trade that stock anymore. And then about 8 hours later,
I'll trade it. I don't think I can be like a long term, I don't think I can be an investor in it at this point.
Well, you were ahead of Michael Burry by about 8 hours. Michael Burry came out with the same.
I said it. I'm like, I think about it. And Michael Burry's like, yeah, I'm out too.
He watches PreMarket Prep. Hey, Michael.
Okay, we can keep going.
You can come on the show anytime, Michael. Okay, so there was a lot of earnings here last night. Let's actually go to the earnings parade here because it's going to tie in with where we're going here. So I want to do a few of these. I want to get to Palantir. So I know I'm going off chart. Like
You're
obviously
fine.
Claude will yell at me for that because I went out of order here. But I want to go to Palantir because it's the storied stock of the day, and it is the earnings stock of the day. And it's going to tie in with this hardware versus software thing that we're going to talk about as well. I'm going to tie us all in. Trust me. Palantir, though, Brentster, give us those earnings here if you can.
Yeah.
The stock's earnings were actually good. The guidance was good. It was the call that was a mess. But talk to us a little bit here about the numbers.
Earnings of 33 cents. Analysts were down at 28 cents, a decent beat there. Sales 1.63 billion. Analysts were at about 1.54 billion, also a decent beat. Their Q2 sales guidance was strong, and they raised their 2026 sales guidance. Do I have this somewhere here? Alex Karp issuing a shareholder letter in tangent with the earnings release. Starts off, quote, "We believe it is not hyperbolic to say that nearly all AI workflows that create actual value, especially on the battlefield, are built on Palantir." He's saying all AI workflows that create value are built on Palantir, not just the ones on the battlefield, all. So that's a pretty darn lofty comment to say, and then have your conference call go pretty poorly. Our Michael Feehan was listening to the call. He said it was a crap show, and he said that they were having technical issues at times when it seemed like the execs or Alex Karp were going to say something important. The call would like break up. They like switched his mic, got him a new mic. It still was like breaking up. So we don't know what the deal was there, but that kind of optical stuff never really like looks good for long-term shareholders, in my opinion.
Especially when you're calling yourself this great technology AI company.
There you go.
Mic work.
Exactly.
I mean, so it started falling in the call and falling, and it's bounced here from the lows here. We have this whole theme, though, which I do want to tie in, this software versus hardware theme. And we've been talking about this all year, and we continue to talk about it. Why? Because it continues to work. It continues to be the play. It continues to be the stocks not to own and the stocks to own. I mean, this is just where we are. You can say, what a rally from the bottoms for the IGV. It's been a good rally off the bottom, but I wouldn't say what a rally. It's not even up as much as the NASDAQ. And then you start looking, at Micron, and you look at, other stocks that are just blasting off. Micron, the $600 price target hit from my trade that I had put on at 475 on Micron in the STN think tank hits this morning. I mean, this is just the market that we're in. It's hardware versus software. Unfortunately for Palantir, it does fall into the software camp. And, I just, Joel, give us some technicals here. This is a very loved stock. Could there be a turnaround story?
I don't know.
There could be.
I don't
know.
But
I mean, here you got pretty decent guidance here. But the call didn't go great. Stock is leaked. They're buying the dip. That's what they do. They're already coming in and buying the dip here. What are your thoughts here, Palantir?
Is this a messy chart?
Very messy.
Mean, I don't, sometimes I look at a chart and I'm like, I really feel good about a level. I think, yeah. And then, and then it just blows through that level. What I could say right now is I think you have to, and I know I've been using moving averages, sometimes don't, being consistent. It's below the 200-day, right? What happens below the 200-day average is usually not very good. So if you're Mr. Long-term investor, you're going to say, I don't care about anything else. When this gets back above 164, hold 164, I'm a buyer. Okay. Or you're buying now is using that as a target. Since that's so far away, I'm looking at the 50-day. But if you're trying to trade off the 50-day here, you're getting absolutely annihilated. You're getting chopped up. Oh, we're going great. We broke above the 50-day. Oh no, we broke below it. Oh, so I'm just going to keep an eye. I'm going to be consistent. I'm going to keep an eye on the 50-day here. 146.03 is where it's coming in today.
It's starting to curl up a bit, I guess. I guess you got that going. A little curl happening, but we're reaching here. Sometimes there's clean, setups with pitches up the middle, like the Micron pitch, from a couple weeks ago, like the Fastly pitch that we gave you last week. There's clean pitches up the middle. And then there's other pitches that are just in the dirt, like sometimes you can get lucky and hit a home run off of a bad pitch, but it's a tough chart. It's a tough chart. I don't know. It's consolidating so long near the lows here too. They usually don't give you a chance to buy the bottom for this long. It's been down here for a long time. So I think I'm a pass on Palantir at this point in time, although it's still a retail darling. So you can never count it out. I want to go to Shopify because we're still tying in this earnings. I know I'm going to be, but I'm still tying in software versus hardware. Shopify, definitely software stock. Give us the earnings report here, the Brentster for the Shopify, as we obviously are looking at this hardware versus software theme.
Do you have Dennis?
Yeah, sorry, I went out of order here.
No, you're fine. You're fine.
Yeah, so Shopify, I don't have the actual numbers here.
Let me see.
Here. They are 3.17 billion versus 3.09 billion. That's on the revenue for Q1. The guidance looks to be kind of fine. Q2 out looks a little bit light maybe, but again, I don't know if it matters. Like, it's about what group you're in. Like, group these stocks. So we got to go back to the hardware theme and the software theme. And we've seen, ServiceNow had great earnings last week, and they had their analyst day yesterday. They're raising guidance, doing a lot of things, and the stock's kind of up, reluctantly up. But I mean, there's just, tailwinds and headwinds. And unfortunately, Anthropic, which we're going to talk about in a second again, is the headwind for all the software and the tailwind for all the hardware. And that's where we are. So your hardware stocks continue to fly, continue to have that tailwind. Your software stocks, even when they're saying okay things, are reluctantly going higher or not going higher at all. So Shopify pops initially on the initial numbers, are fairly low. The stock's way off its 52-week high. The stock, is $170 when it started the year. It's $127. But then, you start leaking, and it's just like the same thing. Software versus hardware. There's haves and have-nots, and unfortunately, software still does not look like it wants to go up. So Shopify falling in the software camp.
I'm just going to go to our playbook here, what we've had so far in software stocks, right? You missed the rally. You missed it. Like, you knew this was a buy under 110. You had two opportunities to do it. You didn't pull the trigger. You were so upset when it put in the quintuplet top at like 135. Here's your check back. Here's your check back to a couple daily lows in the same area. I'm not going to give you all the daily lows. I'm just going to say this 120 area, currently where it's trading, traded lower in the pre-market, traded down to 113.80. Oh boy. I just got to look at the expected move, but you saw what happened to Oracle. I mean, they're all different companies. They all have different dynamics, but Oracle, they didn't like it off their report. It had the check back. They bought it. Microsoft, they didn't like it off their report. It had the check back. They bought it. I don't know. They're all different companies. But if you feel like you missed an opportunity here, you're trying to rebuild a position in something like Shopify, you're getting opportunity. Also, just check the expected move as well to get some parameters to see where the option guys are going to be playing and trying to protect their positions.
It's such a bull market here right now that the rising tide does lift all ships. And I think that's what you're seeing with software. It's simply the tide rising that is lifting those stocks higher. It doesn't feel like these are leading the charge. It doesn't feel like they're the ones causing the tide to rise. They're just going along a little bit for the ride, and it's a little bit reluctant. Even Adobe, which we talked about, Brentster, putting in one of the biggest buybacks, that we've seen in years, and the stock pops initially and then sold off. It's still kind of where it was. I mean, we're just kind of in the mud, stuck in the mud. So, I mean, here's the Qs going up every single day. Here's stocks like Micron that are going up 30, 40, 50 points every single day. And here's, ServiceNow still kind of hanging out not far from the lows. Here's CRM still kind of hanging out not far from the lows, which brings us to ServiceNow Analyst Day. They had the Analyst Day yesterday. We were long going into this because, these are catalyst events. And I'm like, Bill McDermott, I was long into it last night. We bought it on the close again. And I'm like, he's speaking at 4:30. So I'm like, he is the most bullish of bulls on his stock. He's like Benioff. He's going to say good stuff. So, I mean, in the market probably just doesn't, it's probably going to go up when he says good stuff. Well, sure enough, he starts speaking. And then, eventually stock's not doing. Then he puts this slide up there. He talks about $30 billion plus of sub revenues for 2030. And this rule of 60, which we don't have to get into all this stuff, but the stock starts blasting off on this slide. The stock pops $2 in like 2 milliseconds on this slide right here last night. I sell into it. I mean, that's our pop. This is like simple Simon trading, like Bill McDermott. He's not one to sugarcoat anything. He's going to go all in and say how great his company is. He also said, which I don't love, unfortunately for this market, because the market is rewarding Obviously, the market is rewarding companies that are cutting, labor. He said they're going to have the same head count right now as they do at the end of the year. So they're not cutting any jobs. The market doesn't like that right now, especially for software. They want to see more efficiency. Coinbase is trading up because they're cutting jobs here today. So, ServiceNow is up 2% here, but I would say it's reluctant. The guidance looked good. Like everything he said sounded great when we were listening to the call, and it sounded good. Unlike the Palantir call, this was good. He sounded good. But here's the stock just kind of hanging out. Do I think it goes red today? I think there's a possibility. I've sold my stock. I think, he said some good things here, but it's software. And unfortunately, the stock is just hated.
Gave you your check back right after earnings, almost made a new low of the move. And I mentioned this level yesterday, halfway back of this move, 93.30. Kind of held up the last couple days. Now it's trading above it. You want to see a sustained bid here. 93. It doesn't have to be 93.30 exactly, but get, a couple bids in the same area here. Would it be unreasonable to get a gap fill up to 101.03? Absolutely not. But I think before you can get real excited or look for a lot more upside is you got a double top, almost a perfect double top at 104.50. So I think this is setting up technically. I just think the longer it takes to get back up and fill the gap, and the longer it takes to get back over 105, then you just kind of do a reverse.
And sometimes you have to consider, you can't just take a chart. This is what some people do. They take a chart and put it in isolation and say, what do you think? Now you got to look at a chart of the Qs. What has it done? What's the relative strength look like here? This has had huge relative weakness. There's the Qs. There's ServiceNow. These two things look nothing alike. So, if the stock can't go up when the market's going straight up, what's it going to do when the market goes sideways or actually starts giving some back? Probably going to lead the charge down. So I'm of the firm belief here, folks. Again, I'm just opinions. I don't have a crystal ball, though Brent has one in the background. I believe IGV, when the market starts to turn lower, is going to lead the charge down. So we have hardware leading the charge higher, and IGV, I believe, will lead the charge lower. Now, we don't know when the market, maybe we're going to stay in this bull market, and these rising tide lifts all ships, and they might go up a little bit and say, look, Dennis, you were wrong. ServiceNow went from $93 to $100. But I think if we get into a market environment that starts to show sideways or weakness, I think IGV is the stocks that are going to lead the charge down because they're having struggle getting off the lows despite this market. This is what last month has been unbelievable for stocks. CRM is sitting here doing nothing. Even Microsoft, which is the best software company, has went up, but still not looking great. In the last 2 weeks, it's gone nowhere. QQQ in the last 2 weeks is up another 7-8% here. So, the proof is in the pudding here. The market doesn't want these stocks, and I don't know what changes the narrative. I don't think anything changes the narrative, because we have Claude, we have Gemini, but Anthropic is doing a lot of damage to a lot of companies here and not going away. And the valuations they're saying for Anthropic now over $1 trillion. So we have some ways to play this too, which we've been talking about in the STN think tank I've mentioned on the show as well. DXYZ, I'm long DXYZ. It has exposure through it to Anthropic through their special purpose vehicle. And the stock, and also exposure to SpaceX. We were originally in this because SpaceX, we thought the S1 might get a pop. But it also has good exposure to Anthropic. The stock has went from $28 4 days ago now to $40 here this morning, DXYZ. I've sold some along the way here because this is a pretty good move. I'm hoping for a check back here eventually. But there's not a lot of ways to get an Anthropic. And Custo, you are absolutely correct. Check out Zoom, ZM. They've got pretty good exposure to Anthropic. So they were part of the initial funding round, I believe. So the stock's trading up from 90 to 106. So you're seeing an Anthropic rally here too. Unfortunately, Anthropic's gain is software's loss because this Anthropic is hell bent on just disrupting the hell out of the software industry. That's what's happening here right now. So, these are the themes that are driving the bus. These are the themes that are driving price. These are the themes that people are making money with, not software.
Otherwise, guilty until proven innocent, right? Because their earnings were not that bad for these companies, but the street just doesn't believe, further on
that they're sustainable.
They don't.
It doesn't believe that they're long run sustainable. Just like, we were saying with oil, as the USO continues to climb here, we're not seeing the oil stocks, nearly near those highs. ExxonMobil. So USO, like, again, just telling you what the street believes. USO is higher than it was at the beginning of April, yet ExxonMobil is 20 points off of where it was at the beginning of April. What does that tell you? Because oil stocks price on where long-term oil futures are. They don't price on where the short term is because it's a short-term blip. So people and traders still believe that oil futures are going to come down here eventually. And that's why ExxonMobil, XLE, Chevron are lagging USO overall. I don't know. Like, I think oil up for higher for longer, but, long run, is it sustainable? It's hard to say. Like, that oil is going to stay up here for, forever. But I mean, this is just back to that. You've got to look at, what's going on. Understand your relationships, understand what's moving here. But this tech theme continues to drive the bus, so we should give some love to Micron and SanDisk here this morning, because Micron breaking out over 600. We called this in the think tank when I bought it 475. I put my $600 price target on it. That hit today. SanDisk, $1,285 here, up another $30. They have the earnings. The earnings were awesome. They dipped it for like 10 milliseconds, and then they bought the dip on that too. Seagate just seemingly goes up every day. It's up another 12 points here. Western Digi, which disappointed, has come back and is now making new 52-week highs as well. You can't keep these stocks down. Now, where do things top out? I mean, that's a tough question. Calling tops is a really hard thing to do. Danny Kirsch said it yesterday very well on the show. It's hard to call tops. So I don't know. I just keep riding the trade here. Like, you get dips on these things. Like, again, I'm not advocating to come out and chase stocks here, but I am advocating to buy the good stocks on dips. That is what is working.
One quick thing on the oil, perhaps worried about demand destruction, with the higher prices, is something that might be being factored in. And with these stocks, and I was talking about it with the chief, consolidations, are key. And Dennis, this was a consolidation period where you looked at it, right? And you're like, wow, like, had a big run up. So I'm going with the trend, and it's just kind of sleepy here. And a little bit of consolidation. So I'm not seeing any kind of consolidation here. We'll see what the next couple days.
When it gets these moves, these are your ring the register opportunities there, and then you get the checkbacks and the consolidation periods, and those are when you execute. I never like jumping on a moving train. I've told these stories lots of times in the past there too. I learned the hard way. Bright Office, I started with you under your wing. 1999, started in May 1999, the trade office at Bright Trading. And we had the trader that's sitting beside us, and you just jump on the moving train. Like, somewhere you going, I got to get in that. And then he'd lose money. And then this one would be flying. Oh, I got to go buy that. And then it would stall out and it'd come back. And what I realized then is you can't be jumping on these moving trains. You got to wait for like a period of consolidation or a pause or something. It's still fine to go on stocks and uptrends, but you just got to wait for that period of pause, because when you're chasing, it's, sometimes works, but a lot of times you fall under the tracks when you jump on those moving trains. So, waiting for those periods of consolidation are good. And Micron gave it to us. There was a period of 5 to 6 days in April. I'm like, it's just going sideways here, 460, 470, 470. And then it started to break out. It was the day of April 22nd, where I'm like, okay, now we just broke out. Well, it's a classic breakout trade. Well, classic breakouts are working on hardware. They may not work on software right now, but they're working on hardware. Micron broke out, made a new 52-week high, and it's been off the races ever since.
Great, like, couple rants mixed in there. We do have we do have Al Kluis in the background, but let me ask where else we might want to go here. If we want to go to Al, if we want to try to cover another little topic here, other things that we had on the radar that we wanted to try to talk about this morning. We want to try to talk about the Coinbase job cuts. They're cutting about 14% of their workforce. We wanted to talk about Apple holding exploratory talks with Intel and Samsung to potentially have like a backup for Taiwan Semi. We wanted to talk about the Amazon supply chain services thing and implications on FedEx and UPS. And then also we are getting some attention on Fastly here this morning. We think that the DOCN DigitalOcean earnings are moving FSLY, maybe net this morning. Where do you guys want to go here?
Well, let's do the DOCN. It's a huge move. It's up 18.5%. It's helping a stock that I was long. I just sold into it a little bit here. So DOCN, give us the earnings here, Brent, if you're ready for it.
Yes, I'm ready. 44 cents versus 27 cents. That's a really nice beat. Sales 258 million. Analysts were under 250. They raised guidance. They did give some Q2 guidance, which was like a little light on the earnings side. But again, the fiscal year 2026 guidance was raised pretty substantially there for earnings. They're now at around 110 to 120. Analysts are down around $1. We saw Fastly shares moving right around 7 a.m. And what do you know? That's when the DigitalOcean results drop. So we think that Fastly, maybe Cloudflare, ticker NET,
those
also
two.
moving on DOCN. Really strong results and guidance here this morning.
So I pitched Fastly last week on this show, and I don't often do pitches here, but Money Mitch, thanks to Money Mitch too, who was talking about, I was just talking about internet traffic going to go up exponentially because all these agents, and he's like, Fastly benefits tremendously from this. So Money Mitch all over that. And so we give you props, Money Mitch. And then I did a full pitch on it here last week at $25. It's kind of just hanging out for a few days, but it's starting to perk up here and now and starting to look pretty good. We're getting a pop here. Peers to DOCN, when you just look them up, or Cloudflare, NET, and Fastly. I like both those stocks. They benefit from increased internet traffic. Now, they are software, so that is the one thing. They can be disrupted here. But these two companies, Cloudflare and Fastly, directly benefit from an increase in internet traffic. And internet traffic, man, when you think about agents, everybody's creating agents out of nothing all the time. It's basically like population growth within the agents. It's just exponential here right now. Everybody's spawning more agents and spawning more agents. What do these agents do? They search around the internet. They grab information from the internet. They're like putting it all together, compiling information, like our news feed that we just created, same thing, built up of agents that are just going out and compiling and grabbing information for us. So, I mean, when you look at that, like Fastly benefits from that. So, you're getting a nice pop. It was long Fastly overnight, just sold some up here in the 29s, which, it's good. It's been good. Obviously, anybody who else bought that thing back at 25, it's looking pretty good here too. Do we get a check back? Maybe we do. I always get out too soon. I'm pretty good at entries. I'm never great at exits.
Big bread bar. I'm not sure if this was earnings, but you had a lot of people caught this day when it made a high at 30.19. It did punch over that in the pre-market when it went to 30.50. You're below it now, so that's an important area if you're looking for the extended move over 30, a sustained 30 bid, and I'm not just talking about for 30 seconds. So we'll be looking at that, see if we can get back up to the pre-market high for DOCN. Expected move of $18. You have exceeded that when you went all the way to 132.49. Since we're trading above the expected move, let's see if we pull back to the 127 area. That would be the top of the expected move. See if you can hold support there and then resume the rally. If you cannot hold the 127 area, you have a little ways to go to fill the gap, the daily gap from Monday's high at 109.13.
You guys want to go get Al? Should we go get Al? Let's go get Al.
Coming to the stage, Al Kluis, Managing Director, Kluis Commodity Advisors. Al, how you doing today?
Very good, Joel. Beautiful day here in Minnesota.
Beautiful, yeah. It's starting to warm up here a little bit. So we're gonna go to the grains and the things that you wanted to talk about, but I just want to ask you this broad question regarding the market and regarding oil. You've been around a long time. You've been charting the S&Ps by hand and everything. You've been following oil for a long time. And if a year ago someone said there's going to be this war and the Straits of Hormuz is going to be closed and crude is going to be over $100, where would you think the stock market would be?
I think it would have went lower. It's just been amazing. Although we're not that dependent on energy prices anymore in the U.S. economy, we're becoming energy self-sufficient. We're seeing more and more biodiesel being produced, more and more ethanol being produced. So we're kind of diverting. I think 10, 20 years ago, you take crude oil up to $100, $110 a barrel, you probably would have taken 20% off the stock market. Instead, it's like we have another economy over here. And we also, in the last decade, have become pretty much energy independent.
Okay. All right. So let's go to another facet of this war, or of the Straits of Hormuz being closed, and that is fertilizer prices, right? And who's more important than for the farmers than fertilizer prices? And so what is going on? I want to talk about two things, corn and soybeans here, and how they're, besides the USDA crop reports, the prices of fertilizers, the planting season here. Why don't you break down these two commodities for us?
When you look at corn, your inputs, your cost of fuel is about $5 per acre for diesel. So that's now jumped to about $8 when you look at the increased price of farm fuel. A year ago, we were paying about $3.25 a gallon for farm diesel. Now we're paying $5.25. More importantly, though, is urea, nitrogen. Corn needs nitrogen to create photosynthesis and to get good yields. And so our cost of fertilizer, nitrogen, urea, is now about $50 to $70 per acre higher than it was a year ago. In the U.S., we had about 80% of our fertilizer pre-booked. And so we had it in the storage area, had farmers who've got storage, they pre-ply it in the previous fall. So for the impact on the 2026 crop will not be that great. I'm really concerned about what's going to happen in 2027. I have a lot of customers in South America. They're really challenged because, first of all, we have about 700,000 tons of urea and other fertilizers, anhydrous ammonia, that should be moving through the Strait of Hormuz logistically to get into place for next year's South American crop. It's not moving now. I don't know when it's going to get there. And so it's going to have an impact on U.S. corn futures price. I think it'll have a big impact on corn acres in Brazil and Argentina next year, and the potential yields of corn and wheat out of Brazil and Argentina next year. So this is a global phenomena, and every week that we keep the strait closed, it's more and more of a problem down the line.
In for every week does it, it's closed, and we're talking about resuming, oil production back to normal, which is not as big a factor. But let's say, it opened tomorrow, which is not a possibility. How long would it take to reestablish that flow of fertilizer?
I would say 3 to 6 months. And so you're going to have, it's not going to, you can't flip a switch and move it. It's just perpetual motion. You've got the tankers and the cargo ships moving in. You've got them moving out. First, we've got to get them out of the Strait of Hormuz. They're bottled up in there. And so once they start moving, they get to the Gulf of Mexico, ship it up the central part of the U.S., or you go to down to Paraguay in South America, and you have to start distributing it from there. So from the time you end the war, fully open the Strait of Hormuz, you're talking a minimum 3, possibly 6 months before you start seeing it distributed into the interior of the country where you actually need to have it to put on the fields.
And I'm assuming that these fertilizers, they don't go bad, right? They could stay in these tankers for a long time, right? So they don't have to worry about
Or years have to be. Mm-hmm.
So what about when do we? All right, so 26, and I'm sure the futures prices are reflecting, the 26, 27, the spreads and everything. When do we start worrying about 2027 even more?
If we stay closed another 3 months, then you start impacting the ability to get fertilizer where it needs to be for the 2027 crop. Now, most of the concern when you look around the world in terms of corn and wheat production is on the southern hemisphere, because that's where the fertilizer should be flowing out of the Strait of Hormuz, going down to South America, going to India as a massive buyer of fertilizer. And there, the farmers are pretty much insulated from the cost because the government buys it, subsidizes, sells it back to the wheat farmers primarily in India in an effort to keep wheat and flour prices low. Recently, India came in and tendered for a whole bunch of urea. They paid a huge, way above what the asking price was. And when you're buying things with the government money, Joel, you pay whatever you need or want to. And so it was really a shock. All of a sudden, the urea prices, anhydrous ammonia prices were higher. A year ago, we were talking about $600 a ton for anhydrous. Now we're talking $1,200 a ton. So it just, it's really affecting the cost of production. So for 2027, if we do not have the Strait of Hormuz open within the next 3 months, it's going to really create logistical problems getting the fertilizer shipped from the Strait to the Gulf of Mexico and then up into the interior where we need to distribute it.
Well, Al, I just want to go further on that because, like, I'm of the opinion that I don't think the Strait's getting open the next 3 months. I may be wrong, but it just looks like we're at a standoff there. It looks like the stock market's kind of, fine. It's just accepted it because we're running on AI over here. I just don't know if that's going to happen. Is it like fertilizer? Like, where, if let's just say hypothetically the Strait doesn't get open the next 3 months, where do we want to be invested? Like, what stocks do we want to buy? Like fertilizer, like NTR, Mosaic? Do we want to go there?
Nutrien is one that top of mind. They're a Canadian company, well positioned to manufacture and distribute it. They've got a great retail force. Mosaic, Nutrien, CNF. There's a number of fertilizer stocks that I think could be pretty strong.
And then
Soybeans.
What's it do for corn prices, soybeans itself? Like we see, you got a couple funds, CORN, SOYB. Like, let's say the Strait just hypothetically does remain closed. What does that just increase the price of this? Because obviously, supply and demand.
Well, if you shift to less acres of corn, you're going to shift over to more acres of soybeans. However, the longer the Strait stays closed, the more bullish it is for soybean oil. When you crush soybeans, you get meal and oil has just been on a tear lately, and the oil's been really pulling it up. We're also seeing a huge expansion in biodiesel plants all across the Western Corn Belt, where they crush the soybeans and make them and sell them as fuel. Years ago, I used to ride the bus downtown Minneapolis to the grain exchange. This is talking a long time ago, Joel. And the sulfur from the buses, it's pretty nasty. Now in Hennepin County, where I live, they have soy oil blend 5%, and all the buses are running. It smells like roasted soybeans when you walk behind the bus. So we're seeing a huge surge in soy oil being converted into biodiesel. We're wondering where we're going to get rid of all the meal, but if we have the right price, we'll get rid of it. And so the soy oil will benefit from that. The real impact of higher fertilizer prices, and I agree with you, Dennis, I don't see the Strait opening for 2 months, maybe 6 months to a year. Soybeans, actually, you shift acres from corn over to soybeans. So the big impact is on corn and corn prices and potentially wheat as you look ahead to 27 and all the way out to 2028.
So your clients are big farmers, big producers and stuff, and have had a lot of years where price action has not been that favorable, and the impulse is always to sell too quickly, right, into these kind of things. What kind of outlook are you providing for your clients, your corn and
I still think even with all the fertilizer problems, we're likely to see lower prices by August through October. So we have about 80% of the 2025 crop corn sold. We have 100% of last year's wheat sold and about 90% of the soybeans. And for the 2026 crop, we have 20 to 30% of that covered with either short futures or put options. I don't ever want to see any of my customers, the farmers I work with, be in a position where they have to sell corn, soybeans between the months of August and October. So I'm a seasonal seller. Made some initial 2027 corn hedges yesterday when we rallied up to 508. And so anytime we can go out a year or two down the road, there's always something that's going to think you shouldn't do it. But 90% of the time going out and selling a big carry and a futures market. We did this in 2014. We had sold crops ahead in 2012. 2014, delivering on those hedges was great. 2022, we sold crop ahead for delivery on 2024. The only thing we did wrong is we didn't do enough of it. So this year, 10, 20%, we're just going to go out and get some of it sold because we can control, we can't control what's going to happen in the Strait of Hormuz, but we can control the financial decisions we make.
There's one other thing you can't control, which you hear depends on what you read and how you follow things, but it's the weather. how is the weather? Could we get a big whammy here if things are too dry or too wet? Where are we on the weather front?
Right now, we're really watching, Joel, planting progress. We got about 40% of the U.S. crop planted. I think we'll have between 50 and 60% planted by the middle of May. We're off to a very, very good start. We're into either a strong El Nino this year or a super El Nino this year. And you go back to the years when we've had strong El Ninos, we have had cool, wet summers, which gives you very large crop, above trend line yield crop. So I'm banking on, that we have enough fertilizer bought ahead, fortunately, last fall. We have the fertilizer in place. We've got the crop planted in great shape. And the forecast is for a cool, wet summer, which means trend line or better yield. So we're going to have very adequate supplies of crops again. The other thing that's concerning, we export about 40% of our soybeans. We export about 30% of our corn. Right now, the price of corn at the Gulf of Mexico is about 80 cents a bushel higher than if you were buying corn out of Brazil or Ukraine. How long can we keep on selling? Soybeans, right now, we're about $1.20 a bushel higher loaded on the ship in the Gulf of Mexico versus what you can buy soybeans from out of Brazil, Argentina, or Paraguay. I hope the meeting between Trump and Xi goes well, because we are so far overvalued compared to the rest of the world. So there is a huge war premium built into the current U.S. grain cash price and futures market. I have to be realistic. I don't think there's going to be a quick end to the war, but when it does end, when we do see hostilities cease, you not only take energy prices lower, but I think you take the grain markets down with it.
Al Kluis, Managing Director, Kluis Commodity Advisors, also working over there at Wedbush Securities. Al, always a pleasure to have you on, and we'll be dialing you up again this summer. See where we stand on that 2027 crop. Thanks, Al.
Thanks for the call.
Thanks, Al.
Okay, here we are, holding steady. Dennis, are you worried about getting your soybeans and your grains? Not this year, but next year.
It's interesting. Like, if we're going to stay close, it's just good to talk to a commodities guy here and see what happens. I mean, you look at CORN, you look at SOYB, you can look, obviously even WEAT wheat, which is the Tacronium Wheat Fund. I mean, that's perking up and looking like it's going higher too. I mean, these are companies like we talk about, what doesn't care about the Strait? Well, this stuff does care about the Strait and actually benefits. The price of wheat will benefit if the Strait stays closed. So, like looking at stuff that can go up, everybody naturally thinks of oil. But I mean, wheat is perking up here too. Do the technicals here on WEAT, Joel. I like the setup.
A little bit of a pullback here. We're looking at the ETF. Nice little double bottom basis. The ETF. We'll see if we're bearing down
ETF.
on that
it's a traded
today.
Fund.
2380. Yeah. So you're coming into a couple areas of support, but I think you have to look longer here, more, longer term here. And you could say, bigger the base, more the space here. So
yeah.
you had been down here, eat this ETF for a long time. You had to spike up. We all know commodities, once they get going in one direction, it's hard to turn them around. So charts are looking not quite like those hardware charts, but certainly looking favorable to the upside.
Let's go to earnings preview land here. So bring up, obviously, our own Michael Feehan puts together some great charts for us every single week. We tweet these out if you want them. They're on our Twitter accounts here. There's lots of companies reporting this week. Tonight, though, we got a few big ones here. AMD is probably the highlight of the week. And, it's obviously the number 2 to NVIDIA here. What is Lisa Su saying? How does it look? The run up into this earnings report has been astounding. So the bar is as high as you can possibly get. I mean, this looks just parabolic from 200 to 350. I'm still long it. I've been long it forever. Probably just holding on to it because I just think, chips are just going to continue to need. But I can't argue with you if you're taking profits out of the report, because this looks like one of those where, if they say anything, not just, crazy hot, like this, it could give it some back here. The bar is really high.
So for AMD, we are looking for earnings of about $1.30. We're looking for sales just under 10 billion. The expected move looks like it's around $25. That's about 7%. And I'll be expecting those results around 4:15 p.m. Eastern time, Triple D, and I will be in the STN think tank at that time, breaking this news for y'all live in real time with some real-time analysis. Something you can't get anywhere else on the street, folks.
Expected move $25.
Yeah.
You're saying?
That's what I see on bar chart. Thanks to bar chart. So yeah, that put us up around 365. Put us down around 304. Did I do that math right?
375. Well, if we're at 350, but I'm going from we're 350 in the pre-market, so we'll just say from the 350 right now. Obviously, it's going to continue to move 325, 375.
Cool.
Joel, technicals here, you're in like
Easy.
nosebleed territory.
Easy here. For today and today only, that was UBS, I believe, was one that knocked it down yesterday. So there was a red bar, caught people off guard. If you want to, sell into this little nervous, look at the 350 area. The only reason I'm saying that is you did have a big, thick red bar, and it's a check back from that area. Not a super official great level, but one that will come into play today. Actually, it's very close to the pre-market high, so keep an eye on the 350 area. Expected move. I'm just looking at the all-time high, 362.79, and then yesterday's high, 361.85. So looks like you have an appetite for someone selling some stock, selling into strength, not into weakness, selling over 360. So if we did pop over 360 in this report, I'd keep an eye on the all-time high, and then, wherever we end up being the expected move, some resistance. But fantastic move, high bar. SanDisk had a high bar. They reacted. I mean, these stocks have been just on a roll here, and we'll see if the earnings can back up the recent price action here in AMD.
I mean, LITE reports here tonight as well. I have it on my list at least. I think it's there. Yeah, I think
it's yep.
It is. It's light momentum.
Yep.
It's been just on a run too. Started the year at $300. It's $976. The bar is high. The $1,000 resistance point it touched yesterday and then came off of it here. But these are stocks that are just blowing away. These optical names. We've been talking about these nonstop in the think tank here too. As much as we've been talking about chips, the optical names have just been on fire here as well. Again, if you get a dip on these, there's probably underneath demand, and these things seem to, if they rip on the earnings, there's just sky's the limit here. So I mean, the setups, despite the bar being really high, actually aren't that clean to short them. It's actually probably more of a buy the dip if they dip.
Yeah, LITE making a new all-time high yesterday. Your all-time closing high is what we'll focus on here. That's 976.18. You're a good $7 above that. Did cross the $1,000 threshold yesterday, 1,004.94. On pretty good volume there for LITE. And who else do we like to group in with LITE?
AAOI is another one.
Sienna, CIEN.
There's a lot of
Coherent, COHR.
Coherent's another one. It's been down all morning a little bit here, not making a new
high. GLW.
There's a pile of these names here too.
That's a good one. Yep.
I want to talk SMCI, which reports tonight as well. Obviously, this stock has been in the gutter. It's had some of the directors there. They were looking a DOJ case investigating. There's just been so much trouble with regulators here that the stock has just struggled. And the valuation is fine. It's been fine for a while here. The earnings have been fine as well. It's just the regulatory concerns here. We don't know what's happening. So, I mean, are we going to get any color on that? Probably not. Does SMCI report pretty good numbers? I think so. So I think this actually sets up well into the print that you could see a pop on the print. Maybe people forget it for a day that, this company's just been in the gutter here, Joel. But it's hardware. It's been in the gutter not because the environment isn't been awesome. It's been in the gutter because they're just the way they're running the company. So that's where I'm sitting here and looking at this like, I don't know. I'm torn on this one. What do you think,
It's
Joel?
it's just so hard because it's in hardware. You get setups, it gets rallies, and then you just get harpooned. And there's no way, there's no chart, there's no analyst, there's nothing in there that just doesn't tell you that you're not going to walk in this day and it's going to go from 30 to 20. So it's very hard to define the risk. The guy at the gym that bought more a couple weeks ago that I didn't say anything to, I hope he's looking at this $30 level. Because that filled a nice gap. So we'll check to see what the expected move is. I think, but even if you clear 30, you just had so much indecision, so much chop here.
Yeah, the rips are
between
probably going to be
30
sold.
and 32. You're thinking that rips could be sold. And then, how many times has this company just come out and just harpooned that, look at this. Going back, Dennis, I know you played this successfully on the way up and tried to do rebuys, but you get caught in some of these downdrafts, like even back here, like major question marks, consolidations. So long-term trend, not your friend. I don't know what would take to, for this to, to be like an old clear sign, right? Wasn't that
BDO, never heard from. I don't know if you're ever going to get an all clear sign. Like, it's fool me once, shame on you, fool me twice, shame on me. They were starting to feel okay about the stock, and then there were a bunch of directors that did some stuff that they shouldn't have did. They just running, it's sketchy stuff that's like, at least, the rumors of sketchy stuff here. When you're under investigations from regulators here, investors are concerned. And that's why I said, like when we were saying with Dell and SMCI, when Dell was $120, I'm long Dell. Because I'm like, the valuations are similar. I don't have to worry about Michael Dell doing sketchy stuff. So, and that's been the play. Like, SMCI's gone nowhere, and Dell's, it went from 120 to 220 here. So that was the simpler one. Now, Dell's maybe run too far for me now. But I do think SMCI could pop on the earnings here. I do think also that rip probably gets sold.
All right, one more tangent before we end the show or do ratings here. And we had a lot of fun yesterday with the nacho trade, right? And we said, so in honor of Cinco de Mayo, I have come up with another acronym for the market. Okay?
Okay.
Is it
you
burrito?
Guys you're either going to like it or you're not, but I really don't care.
Chimichanga.
What?
Chimichanga.
Nope.
What do you got? The suspense is killing me. Drum roll, please.
Put my charts up.
Oh,
well, let's get it up. Okay.
Burrito.
What's it stand for?
Okay. B. What do you do in this market? You buy. Right?
Okay.
Why do you buy? Got to get to you. Because there's always upside. Okay?
Okay.
This is a long word. Here we got.
Well, it took a while. Come on. Give me.
All right,
what's the
so far?
And then you
Well,
reload.
you got a double R.
You reload.
Close. This is what you learn in the
react.
STN room. You react. Okay? What else do you pay attention to? Reversals, right? We all look for reversals. I spelled it wrong here.
All right.
Okay. And now this is where it gets good.
The ITO.
The ITO. Might not get a lot of fans off this one, but who cares? Are you ready for the I?
Yeah.
Ignore.
What are we ignoring?
What do you think the T is?
Taco?
Ignore Trump.
Ah! And then what is the O? Outbursts. There you go, folks.
Wow.
There is your burrito trade.
The recipe for a bull market on Cinco de Mayo by our own Joel Elconin is buy because there's upside and you react. And what do you do with the reversals?
You react to reversals. That was
react to reversals by buying them. You ignore Trump, and then there's outbursts of profits.
or you can ignore. You
That
can,
was an impressive like acronym to get that many letters in there. Like I'm like that was impressive. That was impressive. You like really stepped up there. I'm impressed.
yeah,
I might tweet that one out again.
Enchiladas, and someone said salsa, but you get 2 S's. I mean, I did my best.
I was
there.
impressed with you. I know some people in the chat weren't as impressed. I was impressed, Joel.
Oh, I think some people are.
The burrito trade on Cinco de Mayo. There we go. What a way to finish the show. Join us over STN Think Tank. The show continues here. We're going to talk more setups here. Obviously ringing the register looks like on the Micron. Fastly, maybe it's a ring the register opportunity here too. It's nice when you can ring the registers here. Let's keep going. DXYZ has just been a monster. So let's go get more ideas. The Think Tank. Let's go. $5 from Gabe for the burrito.
Where's that going to get me a burrito, huh? Not
nice.
at CMG.
Gabe buying you a burrito.
Not at CMG. Folks,
thanks, Gabe.
Thank you.
Very good. Very good. Very fun.